Let's go to the Johannesburg Stock Exchange. Nompumelelo Siziba is standing by. Nompumelelo, good afternoon and over to you.
Thanks very much, Nzinga. Well, global markets are pretty much mixed at the moment. The all-share index here at home, that's trading in positive territory with industrials leading the charge. Well, it's not much of a charge, but, you know, they're the leaders at the moment. But I see that resources are really not doing very well at all. They've really tanked this morning or this session so far. The gold price has fallen slightly. It did breach the $1,350 a barrel, an ounce, pardon me, mark after those Syria strikes over the weekend, but it's sort of receded now and is trading around 1,345, somewhere there. And in company news, Anglo Gold Ashanti, the CEO there, whose name is very difficult to pronounce, but we journalists call him Venkat. He's resigned. He's been CEO there for 5 years. He took over from Mark Cutifani, who's now the global leader of Anglo American. He's leaving to pursue an opportunity at Vedanta Resources. Let's take a look at the indicators. Well, I'm joined by Gary Boyson. He's a portfolio manager at Rand Swiss. Thanks for joining us, Gary.
Thank you for having me.
Good stuff. So, in concert, the US, UK and France, they did their thing, shut down chemical facilities, and markets don't seem to have been too shaken by it. We see that markets are mixed. Any concerns on your side?
Yeah, so it's difficult. We have seen, I suppose, a slight move towards risk off this morning. The markets have been mixed after a fairly strong run. Generally, you know, you do see markets lifting with US earnings season. We've got very, very good reports out of the US banks, so that perhaps counterbalancing some of the geopolitical fears. You've got you know, a slightly stronger yen this morning, which is a typical safe haven asset as well. Although that could also potentially be because of you know, a poll in Japan where Shinzo Abe came in under 30% popularity, that, you know, technically could have strengthened the yen as well. So always difficult to try and untangle the various drivers of the international markets. But certainly I think markets are concerned about rising geopolitical tensions. Some commentators coming out and saying that, you know, the fact that the coordinated effort was to strike only chemical facilities, leaving the Assad government's military very much intact, you know, also shows that the message is clear: don't use chemical weapons, but otherwise we aren't going to get involved. So that perhaps why markets you know, not reacting dramatically and the reaction quite muted.
And then, of course, when anything goes down in the Middle East, the oil price, we tend to worry about what will happen to that. Any movement from what you've seen and your prognosis for the oil price?
So oil price, yeah, oil price is actually slightly stronger, it's slightly weaker at the moment, at least. And again, that's, you've got to take that into context of what's been going on. So we are at 3.5-year highs on the oil price at the moment. So this could be you know, a little bit of profit taking as well. And if you have a look at oil, I mean, oil is a very complex situation. In the past, the Middle East has obviously been very, very important. The rise of the US shale boom and the US ability to supply its own market has changed the balance of power slightly. So you see that the impact of actions in the Middle East are less pronounced. If you look at Syria itself, I mean, Syria's oil production basically collapsed when the civil war started in 2011. So there's been no exports from Syria, and any real reaction to oil price versus Middle Eastern tensions would have to be around probably most likely Iran, or, you know, potentially oil could also get moving if there was some serious impact from on Russian production as well. But until that happens, I think, you know, we're kind of looking at a fair value on oil at just above $70 a barrel.
Well, let's hope there's no more conflict in that regard. So now, with volatility having increased a fair bit, barring all this stuff, tensions between the US and Russia and so on, how is this influencing the way that you're investing on behalf of your clients? You know, are you still equities heavy? Are you moving to other, you know, asset classes? What are you doing and what are you advising?
So looking at it again, it's a difficult question because, you know, everyone's investment needs are so specific, and often, you know, investment decisions are led by client need as well. If you are looking at the long term, though, I mean, equities we still see as the place to be. You know, you look at kind of the other asset classes, and you know, if you do have a 5-year plus time horizon, equities is very much where you have to be. The volatility that we've seen picking up in the first quarter, certainly I think given people a lot better, you know, access to the equity market. I mean, suddenly P's are looking far more reasonable. So I think you're looking at a little bit more value than you have in the last little bit. Also, again, you almost always see, you know, again, like I said, we're very much driven by clients as well. So certainly I think the excitement around local investment has definitely picked up, and that's almost always converse. You know, they buy when others are fearful, and you know, sell when they're greedy. But certainly with the rand moving down from that 14, 15 rand level into you know, hovering at around 12 rand to the dollar now, you would think now would be the time to move offshore. But certainly the client interest has definitely been in the local market, which I suppose is one of the reasons that we have a stronger rand after all, because that's where people are wanting to invest.
Indeed, indeed. And then you know, going back to the tensions between the US and China, this whole trade war problem that people are concerned about. Now, the steel and aluminium tariffs, they were supposed to take effect on the 23rd of March. Do you know if they've actually taken effect? And if indeed they have, what impact does this have for ArcelorMittal? Because obviously they do export, not that much, but a fair bit to the US, and it would affect their bottom line if they're going to be whacked with a 25% levy. Yeah,
so the tariffs are meant to come in 23rd of March, and there's been a whole host of exceptions coming out of the US as well. So South Africa's now made an application to the US to be exempt as well. Although, you know, in terms of total US trade, so South Africa's you know, exports in terms of aluminium and steel are minor. I mean, we're sitting at about 1.5% in each of the two commodities, give or take, you know, a little bit. Again, if you kind of look at South Africa, this is a costly application. We don't have an exemption currently, but at the same time, we only export around 5% of our steel to the US. So it's you know, it's not material. It is important, but it's not you know, make or break for South Africa. In terms of ArcelorMittal only exports about 2% to the US in terms of its total you know, its total revenue. So it's also very, very small for the company, and ArcelorMittal is far more focused on the domestic market, and the exports that ArcelorMittal does facilitate are very much overland exports into Africa. So I think the impact will be limited at this stage. We are, as I said, in the process of an application. It's also interesting to note that China has also made an application to the World Trade Organization to have the tariffs declared unfair, and there's a 60-day process that will be followed. But yeah, it's interesting. It's difficult also to analyze because we don't know how this is going to, you know, especially with the changes in who the tariffs are going to be applied to. You don't know how that's going to change the international flow of trade, how that's going to affect the various prices, and how that's going to affect trading partners that are with South Africa that are non-US companies and their demand for steel and aluminium as well. So it's still a complex situation, but I think the effect will be muted.
It's complicated. All right, well, that was Gary Boyson. He's portfolio manager at Rand Swiss. After a short break in Zingaz, more business news for you.